Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 29th, 2016. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. One thing we talked about before was how price had been holding above the 2000 level, and that was the key level to watch. Basically, when price pushed above that zone and began to find acceptance above that area, but has failed to push to new highs and complete the move into our HVN target. However, that target still could be reached soon, but there could be a pullback ahead of it. So right here, this is going to be important. If price pushes down into 2000, that's where bulls want to come in and defend for another squeeze into 2061 and perhaps 2077. But failure to hold above 2000 opens up a move back across the range into 1941 and 1959 half. So it's going to be very important to see how we play out of this zone. As a matter of fact, if you look in the intraday time frame right now, prices after the rejection that we talked about at 2037, that was an indication that we were likely headed lower. Ever since prices were failed to basically hold above these highs at 2044 half, it's been a steady move downward. This pullback was strongly rejected in overnight and pre-market trading the previous session, and you can see now that for the most part here, this area right here upon retests is 2034 half. That was 5-day VPOC before. Defended again in overnight trading this morning, and then here through 5-day VPOC after a shift down, and now trading below the previous session's low and below 5-day value. So this is going to be important here. The failure to get above 44 half and now 34 half implies further downside selling pressure. The key level to watch here is going to be 2018. If bulls can defend 2018 short term, we could see a rotation back to 5-day value at 2027. Otherwise, look for further weakness toward 2011 and perhaps that 2000 key level down below. Here's a look at crude oil. Crude oil, we talked about before how prices pushed into 42.50 and saw rejection here. We talked about that in the trading room. The moment it was testing 42.50, we talked about how that was the bottom of the previous key range, and that zone right there was already being defended. Additionally, right here, there's a bit of an LVN. You can see how prices held above that zone. It was resistance, tried to hold and see acceptance, and it went offered on this session. Came back up and tested right here at the top of the pivot range and is now seeing some weakness. So this is where we were talking about how prices failed to get above this zone and are now being trapped, and that could open up a bigger downside reversal. The key level down below for bulls to defend is going to be 37.65. A test into that zone will want to be defended for a return and a retest of 40. Otherwise, failure to hold 37.65 opens up a move into the next HVN below, which is 35.17. Intraday, crude oil has formed a very large impulse range. This key range here goes from 41.90 down to 38.33. Came right back precisely to that midpoint at 40.12 and immediately sold off. In the trading room, I talked about anytime price forms an impulse range like that, tests the midpoint perfectly and drops, usually you're headed right back toward the bottom of the range for a retest. That doesn't mean we'll see expansion. It just means a major retest will be seen, and at that point we'll know whether we're going to move back up toward 40 or drop and start seeing expansion to the outer expansion levels. So it's going to be very important to watch 38.33. 38.33 is the level to watch. If price gets below that level and can't find acceptance, we could see a quick snap back to 40.12. Otherwise, failure to get back above 38.33 will open up a move across the range into the downside targets shown here. All right, let's take a look here at gold now. We talked about gold being a great buy opportunity the previous session. This was the low we've seen after this big push downward. Remember, we were talking about selling 72s here since prices were not able to see any acceptance above 72s. That's been our rejection zone. We've seen selling back toward the key zone here of 27.70 to 12.33.30. That zone right there went offered and price dropped. Once price dropped to this area, it hit the third standard deviation on the PivotBoss bands on a monthly basis. And that usually in an uptrending market to hit a third standard deviation below VWAP implies a buy opportunity back toward VWAP, which is currently monthly VWAP about 1251. Additionally, if prices make this the low, then you have a primary weekly bull target sitting in the 1245s, and then a 100% target at 1258. So there's definitely some room to run here to 1240s ahead if prices can stay above the 1210, 1211 zone. If we look at the NQ now, you can see the NQ here is showing some weakness also early on, but we haven't broken back below the 43.55 key level just yet. That's the level we've been talking about this entire time. Once price went bid through it, we were looking for bulls to continue to defend it for another squeeze into 45.23. But we have not seen any push higher. Instead, pushes higher have been rejected, and now you can see that the pivot range barely formed a higher value relationship and is very narrow, and it shows that there's been a loss of momentum right here. So right here is going to be very important. If price cannot hold above 43.55, we could see a move all the way back against the range into 4,200. So this is going to be important to watch. And if we look at the intraday time frame here of the NQ, you can see the recent key range that formed an overnight trading, 44.26 to 43.81, the midpoint at 44.03. Look at how bears have defended staunchly that midpoint here, time and time and time and time again, eventually forcing a break through 43.81s. This is going to be important because we're currently trading below that 43.81 now. If price cannot find acceptance below that zone, we could snap back quickly right to 44.03 and perhaps trade back across the range. But holding below 43.81 will imply a continuation toward the downside extension targets here. We have 43.59 half and 43.37 half as major targets, in addition to our ADR flags as well. So 43.81 is going to be very, very important to watch as we head out the rest of the session. Failure to hold below it will snap this thing back to value. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.